Everybody is wondering what's happening in the market, how much more the prices are going to fall. Well, there was a sales drop in December and a staggering increase in the number of days it takes to sell a home. Now, if you're interested in purchasing a property in today's market, now is a great time to meet your realtor and get into the streets and pick what's yours. A lot of home buyers were sitting on the sidelines and hoping and waiting that their day will come. I'm happy to announce that the market has shifted and you finally have options now. Okay, great. So I'm gonna take this conversation to a little bit of a bird's eye view level. Oftentimes when we speak with people, they have a really good perspective of what's happening right now. But the true prediction, the predictability of the market is more accurate when you're able to get yourself out of what's happening now and look at 5 to 10 year trend. So I'm going to shift the angle a little bit and show you how this inventory compares to what was early in 2022 and the beginning years. And Bree, after this, I would love for you to help us draw the comparison on what properties were being sold for in 2022 and what it's really costing a buyer or an investor in 2023. Sounds good? All right, perfect. So I'm going to share my screen real quick. So if you're looking at this property right here, this data right here, you're able to see how this data has changed significantly. Now, I know there are a bunch of numbers, so I'm going to zoom in a little bit harder and make it a little bit more readable for you all. Okay. So this is January. I won't complicate much. We are here in December right now. What is the month of inventory we are showing for month of December for overall Austin market? 3-month inventory. How did we start in January? We started with 1 month, dropped it down to half a month and back to 3 months. But if you look at the prices, what we started in January and what we ended in December is not too far off. So the stabilization is experienced because of the hikes we experienced in the second quarter of 2022 versus what we got in fourth quarter of 2022. Now, why this is something we need to look from a bird's eye view is because if I just scroll up a little bit, please know back in 2018, having a 3-month inventory was a norm. And this is where the prices were $350 and they were slowly going up and they started stabilizing. And this is where the interest rates were low. So having a 3-month inventory is not something that is out of our knowledge. We're used to having a 3-month inventory. Now, what we are not used to is experiencing a 3-month inventory right after a half a month inventory. That is what's really causing the chaos in the market. And remember, guys, we're about to evaluate some hands-on properties because we want to make sure anybody who's watching this is able to become super clear about what's truly happening. Is it market crashing or is it the normalization that you have been waiting for last 2 years? So just remember, when you hear the news and they say the prices have dropped by 10, 20%, dropped comparison to what? Right, Bree? Like 10 to 20% compared to what? So in January, when you're hearing the news of 10, 20% drop in price, is it compared to January of 2022 when we were riding 1 month to half a month inventory? Or are they comparing it to 2018? Because if it's 2018, we're on a big hike. So without any further ado, I would love for Bree to actually introduce the one-on-one comparison of our buyers and investors on what they are missing out on. And while everybody is waiting for the market to go further down, we are a bit concerned that market might take off. And we all can look back and have an ouch moment. Bree, please take it away. Show us exactly what the purchases in 2022 look like for investors and buyers and how they're different in 2023.
Yes. So I'm going to share my screen. So we bought this property in Gerald, 1428 square feet, bought it at $349. Okay.
Very nice.
Now, our rent was, Rosie, do you have that rent in front of you?
Yes. So the rent on that property around was $1,800 a month.
Okay, $1,800 a month. Now I want us to take a look at what's happening in Gerald now. Remember that 1,450 square foot property at 349. Let's just go 1,300 to 1,600 and look in Gerald at what you can buy now.
Mm-hmm.
And I'm gonna say under 325.
Mm-hmm.
We have 19 matches.
Wow. Okay.
And look at this.
Okay.
None of
Okay.
them are
Okay.
above-
This is Brie. I have to pause. Let's take a moment here. So you're saying in 2022, when the interest rates were 4.75, 4.5, and all that crazy stuff was happening, the prices were 349. Explain this again. What happened in the same neighborhood?
Same area, same square footage, prices under 325. We have 19 active.
Wow.
And they're going from 249 to 299.
So there's a 50K drop in prices. Now the real question every buyer might be asking themselves is, can they buy now?
Yeah. I want to show you another example in Temple that I just ran with some of our investors.
Please take it away.
This is, you're not going to believe this. Okay, look at this property right here. And I'll just show you interior so you can see beautiful home. You might just need to paint a wall, right? But good, solid, new home, right?
Mm-hmm, mm-hmm.
It was built in 2020, 1,507 square feet. If we look at the comps on this, right? It's on Dominic Drive. You're getting 1814 average rent, and the average days on market is 29 days. Okay.
Pause. I have a question. You said that for 295, they're getting 1814 rent, and we still have some room for negotiations because market is different. You're saying they were getting the same rent when the properties were purchased for what price?
349.
Whoa. I
Now
would
look at
love for you to share with us, how can somebody get over the fear and have a clear perspective of what it's really costing them? Because everybody's in this illusion that interest rates are high, I can't afford anymore. They just like sit down. So please take it away.
So one thing that we did was we actually ran numbers for this property, okay, with a 10-6 arm, okay, meaning they're going to have the same interest rate for 10 years, then the interest rate will be variable every 6 months, okay?
Okay.
So they can always refinance it at any point in time if they want to, or
Within 10 years.
within 10 years.
So 10 years, okay, the only way this doesn't make sense, if we're betting on the fact that for next 10 years, interest rates are not going to go down.
Exactly.
Which is it possible? Well, guys, they're already talking about bringing the interest rates down because money got to move, right? And if we're betting on the fact that in 10 years, your property is not appreciating, you're not going to get a chance to refinance. And let's just put that to the side for a minute. The real question is, how is someone able to buy the property at 5.25 interest rate when everybody is crying about 7 and 8% interest rate? Help me with that.
Okay, so this 5.25 rate is utilizing the 10-6 arm, meaning you're getting slightly less rate, and we are getting a closing cost from the seller. Remember, as an investor, the maximum contribution that we can get from a seller or a lender is 2% of the purchase price, okay? So
Say that again, Brie, for everybody who's trying to negotiate hard. How much money can be applied towards the closing cost credit for a buyer?
Only 2% for investment.
For investments. So if somebody is getting 2% of the loan price, loan value, or
2% of the purchase price.
Okay, so if somebody is buying it for $300,000, the 2% of that is $6,000. So nobody should be asking more than $6,000 in closing cost credit because you can't even apply it after that.
No. And then if we look at this, we're utilizing that credit. We're going to buy down the points for that. We're going to use 4,348 of this 5,700. Okay. Of this 5,700, we're going to utilize 4,000 of that to buy down the rate 2 points. Okay. To get us to that 5.25.
Well, hold on. Okay, I have a whole new epiphany just now. So show that number again, Brie, where you were showing, just zoom in on that. 4348 cost. Zoom in harder on that. Okay, guys, you see that? Somebody, forget it's a buyer or a seller, forget who's paying for it, right? If somebody just decides to buy the rate down. The only thing they have to do is pay 43.48. On contrast, somebody was willing to pay 43 above asking in cash, 43K above asking in cash, and still not get the house. So you can stand for 1/10 of that cost. You can buy your rate down and still make a house affordable, and rather than paying $349, you can buy for $299.
And look at this.
Brainer.
Look at this.
Show
With
me.
our principal and interest, taxes, insurance, and guys, this 120 for your insurance, this is way over. I mean, we're normally looking at $80 a month or something like that, but overestimate, that's fine. Your payment is only $17.60 a month. And remember, your rent, $18.14.
So when properties go back from $299 to $350 again, this person is still able to instantaneously gain a $50K equity, and they never even had to be out of pocket. Did I get it right?
Yes.
Wow. Bree, just for everybody's comparison, what do you think a $350 home was costing in monthly payment in 2022 when interest rates were so good?
Well, we can run numbers.
Yeah, let's do numbers real quick on that. So if anybody was buying $350 when the interest rates were low, let's look at what the payment looked like.
They're putting 20% down.
And it was
what kind of rate they're going to
4.75.
4.5 maybe. I'm going to use the same property taxes
Yeah.
in this estimate. So we can kind of see this was, what was it?
120, 439.
Okay.
Okay. All right. I don't think I have to say anything. Zoom in and show everybody. This is the comparison, guys, you must look at. So if somebody bought a property for $350 with a low interest rate of 4.5, back in 2022, 2021, they were paying $19.77 in the payment. And Bree, take us back to that sheet again. The same house will cost how much now
Oh,
in our monthly payments? Like that estimate sheet that we saw. Wow. So are you saying our payment is lower today with higher interest rate than what the payment was with the lower interest rate? Wake up call. This is the wake up call, right? Bree, what would you say on a closing note to every buyer who has been complaining about interest rate and they think the market is going to continue to drop?
I would say this. Now is the time. Again, now is the time sellers are more than willing than ever before to negotiate and to be willing to accept offers. Now is the time. I mean, we just saw the numbers, right? We just looked at a side-by-side comparison of a $350,000 property versus a $295,000 property. Same taxes, same insurance, right? And the rate, even though the rate is higher, we can negotiate off of closing cost credit, buy down our points for the long term, right? Use some creative financing and don't do conventional 30-year. Maybe we look into the 10-6 ARM, an all-in-one loan. Don't be afraid to look at the numbers. Don't be afraid to look at the inventory, right? And grab your fair share of what's happening in the market.
So basically what you're saying is when someone chooses to look at the inventory, reevaluate interest rate payments, and really sit down and draw comparison with a trusted partner in the market, they can easily realize the opportunity and grab it.
Yes.
And if they don't, what is the potential?
They're going to lose out.
They're going to miss out. We're afraid there's going to be a lot of ouch moments 6 months later when buyers won't choose to act now. So guys,
Before I say anything, one thing that I would hate to have this kind of call where someone calls and says, Brittany, Rosie, I wish that we had bought a property back then.
So guys, if there has been a time in your life where you look back and say, I wish I acted then, this is that time. For last 10 years, we had the highest hike in prices for 120 months in a row, which is very unusual. This is the disruption people were anticipating, and we're afraid that people are gonna follow too much of what's going on online and not really sit down and compare with their trusted partners in the market. And when it's time, in the market when the news changes and they start saying, oh, market is restoring itself, it's starting to stabilize, buyers are getting back in the market, I'm afraid by that time it's going to be too late. So if you're someone who likes to stay ahead of the market and wants to work with professionals who are actively participating with lenders, builders, sellers, and keeping their fingertip on the pulse of the market, we're your people, and we're here to bring to you what you deserve to know. So without any further ado, please click on the links below, look at the reports, watch the video. If you have any questions, set a Zoom consultation. We'd love to come face to face and help you interpret this in an easier way. Opportunity is yours, guys. Let's grab it. Thank you.
Bye.
Bye.